Well, we're joined now by Mark Bristow. Mark Bristow is the Chief Executive Officer, of course, of Barrick Gold. The company has just reported its second quarter results. Mark Bristow, thank you very much for joining us. Barrick uses the word stronger performance to characterize these results. Why do you like these numbers?
Well, Paul, numbers can always be better than they are. So better quarter this quarter than last quarter, and outlook looking positive for the second half of the year. We always guided a more positive second half, and we're on track for that.
How is the company managing costs? And how difficult is the inflationary environment that we're seeing in many parts around the world? And of course, viewers know that you operate in many countries around the world. How is that affecting your ability to control costs? One thing I note, and we've mentioned it to viewers already, is that all-in sustaining cost, that's a per ounce measure of your production costs, grew by 11.5% over the past year.
Yes, Paul, costs are a reality, and we've been saying that the inflation is coming for some time now, and I think everyone tries to deny it, but it is what it is, and it's how we manage it. And as you point out, when you look at all-in sustaining costs, it's got other inputs in those costs. It's not just inflation, it's relating to grade, it's sustaining capital, pushbacks, etc., that you have to manage in mining. And so one thing for sure is our assets are of a quality that we can ride any cost that is thrown at the industry. We are sustainably profitable. We have some big projects with big pushbacks at the moment, so we have guided higher costs for the year, and we could exceed guidance even, but that's the short term, and we're comfortable that our business plans are fully intact going forward.
You mentioned big projects with big pushbacks. Explain exactly what you mean there. You're expanding some of your operations.
Yes, well, Pueblo Viejo in the Dominican Republic is a big expansion project. It's got some pushback to do. We have a massive pushback in Lemoana, which impacts our costs. We bought a new fleet to manage that. So those two are critical. We also have a big pushback on the go in Valadero in Argentina. Those are normal course of business working capital pushbacks, and they do impact on the all-in sustaining cost profile. But longer term, we have a long runway, as we've pointed out before, 10-year mine plans. We don't need new projects or new discoveries to support our 5 or 10-year plan. But we've got embedded growth now coming through from our portfolio. And so exciting times with some substantial growth coming at the back end of the 10-year plan.
The company's history, of course, traces back to Nevada, and those mines remain real foundational pieces of the Barrick portfolio.
Exactly. Nevada is it produces nearly 50% of our gold production on an attributable basis. That is our foundation, as you know, our value foundation. And again, for the first time, we're starting to show some exciting exploration opportunities out of Nevada.
Copper, will we see weakness? Will the recent weakness in the copper price be reflected in the next set of results from Barrick Gold? As you know, the world price of the global price of copper has dipped recently. We're looking at the graph right now. Our viewers can see it from about $4.50 in June to the current $3.50 or so.
Yeah, well, as miners, our job is to make money throughout the cycle. I've always said that. We've talked about it many times in the past. And we allocate capital at $275 a pound for copper and $1,200 an ounce for gold. And we have assets that can comfortably manage the cycle. So sure, they will lower copper prices, of course, show a lower profitability. But at the same time, we're still profitable, and we're profitable throughout the cycle.
The company announced a $1 billion share buyback plan earlier this year. How are you progressing against that plan?
Well, you would have seen today that we announced we had bought back shares in the last quarter, and our focus is to continue to buy shares out of the market all the time. We believe that the share price has not reflected the true value of that stock, and right now that's the case. If you look at our dividend proposal today, it's showing a yield of around 5%, and that's certainly in a gold industry that says to you that the share price should be higher.
And that's a question I'd like to ask you as well. You must be disappointed in the share price. You can't control the share price except to run the company as best as you possibly can. But you've got to be disappointed in the performance of the shares thus far this year.
Of course, Paul, there's no one that wouldn't be. And I am definitely disappointed in the share price. But at the same time, we've built Barrick into a position where it's independent of the market. We don't need to rely on our share price to grow our business, to deliver returns for shareholders. And I've been in this position before many times in my career, and it's about managing within your means, and certainly with the balance sheet that we have, we are not restricted in any of our plans. So and in time, I have no doubt that the share will reflect its true value.
Okay, the company says it is on track to meet its gold and copper production targets. What are those targets?
So you know the guidance. So we're very committed to getting there, both in gold in our range, and copper. We're going to be at the top end of that range by the end of the year.